Welcome back to the channel, guys. I'm your host, DXB Crypto. Hope you're doing well. Smash a like if you're returning. 90% of you who watch this content don't actually subscribe to the channel. I'd really appreciate if you could just tap that subscribe button. It's totally free, guys. Let's get on with it. So today, what a day. Everybody's pinning their hopes on Jackson Hole, the Fed tone, based on the minutes that we had. So the reason why the market is correcting, people still believe the Fed is very hawkish on the evidence of the Fed minutes. Now, what does Fed minutes mean? Fed minutes is a way for us to understand where the head of the Fed, the temperature, direction, consensus is. We knew there was a disagreement between Waller, the two Fed chairs for the first time since 1993. However, the vast majority of the federal members believe that inflation was the bigger threat now than labor, because they believe the US labor market is solid and it's at maximum inflation compared to the G7, G20 globally, right? However, we do have another hurdle to clear. Next week, we've got the PCE data that's going to be published. The personal consumption expenditure is also another indicator of where the inflation's at. Now, what's the issue here? The issue is, because they believe maximum employment is there, we also know the tariffs will impact that. Deportations are happening, of course, and we know bankruptcies are the highest they've been in the US for 15 years. So when you add all of those, labor market reading that we've just had previously, you understand clearly that the revision of those numbers means the labor market is not all well, but the Fed keeps saying that. That's what they believe in. So overall, this really does paint a picture of uncertainty, with the odds yesterday when I posted this being at 80% level, and now overnight they've tumbled to 73%, which is still very good, way above 50%. Of course, these things tend to move either way, but the market is still very much in consensus for 25 basis points. Nothing to worry about. I know the banter bubbles or bubbles are red in general. Exchange tokens and stable coins are higher. Casper having a little bit of a 2% move today. But overall, that is the big picture for Powell. Now, I've been saying it for a while. All eyes on Jackson Hole. I've given you, for the last 2 months, I've given you like maybe 10 videos on to reasons why August and September is going to be a little bit tricky. The picture on BTC on the daily looks okay. However, the weekly does paint a bearish picture. We've got a sharp decline of the RSI. We've got lower institutional blocks for Bitcoin on the weekly. And right now we are in a significant order block. If we drop from that, if you go back to the daily or the 2 days, you would see the next level to pick this up is between 106 and 102. Yeah, it's a long way down if things don't go our way. However, there are smaller order blocks here on the 4 hour, of course. Nevertheless, you don't want to really lose these levels very, very quickly. But right now, things do look a little bit more difficult. I'm not going to paint any picture. Having said that, this is the most beautiful picture in the whole of cryptocurrency, right? There is a revival here for the Bitcoin dominance, but if we look at this on the weekly, this is the picture. This is the picture I want to buy my crypto with. This is the sexiest chart in the history of crypto, and I do believe as this comes down, it's going to be a major, major, major plus for altcoins. You can see here on the weekly, it is reviving a little bit, of course, but it can drop all the way down, hopefully to the low 45%. Maybe as low as 33 to 40% for us to have a maximum bull alt season. Now, if you look at this, this has been up almost 4 years and it's never really broken trend. It has been above and below the center line. However, this time round, we are dropping out of that box. Attempt to retest is possible. Bitcoin dominance could still, guys, it could still go up, but so far it's never really passed 70, I believe 60, 63 to 70%. We've never passed that. So I'm not going to worry right now because of that. And of course, I do believe the highest we've got here in one of these weeks was like 60, 66, 65, something like that. This is really, really looking good. So the total 2, my indicator for calling this recent backdrop, and you can see how really, really clear it is. Rejection there in December. We came all the way down to 800 something billion. Rejection here, like for like, that is an area of immense resistance, guys. So that's another reason we have actually finished that weekly candle, or sorry, that daily candle there. And the weekly one is oversold, but we could continue to revive and recover that and attempt it. I'm glad the daily has been reset. 1.5 trillion for the total 2. Total 3 looks okay. Again, RSI still holding up on the weekly. However, we need to watch because this was an area of resistance. Of course, the blue line is starting to curl up, maybe giving it one last hope to try and take all-time high. This has been an incredibly tough resistance for the smaller altcoins. And of course, you could see here, rejection, rejection, rejection. So that's the level we need to break. And if we do need to come down, it's going to be just under under $1 trillion in market cap. So overall, nothing to worry about. All eyes on Powell. That's going to happen. But take your emotions out. Be very careful, super careful if you're a leverage futures trader. And of course, most important thing is, guys, these markets will take their course. Crashes happen, booms happen, but it's just how you react to them, really. Money is only made in the red, and money was made in April. Anybody who bought bloody low fee in April did a 10x on that clean. So you need to have that kind of mindset, guys. Let me know your thoughts. Do not panic, and I'll catch you on the next one.